What's going on, guys? This is Sunny from FX Sharks, and in this video we are going to be talking about what actually moves markets. You know, when I started, there weren't many resources or videos or articles telling me what actually moves the markets. Now, before we go into what actually moves the markets, what doesn't move the markets? You know, indicators. For a very long time, many people told me that indicators are moving the markets. Sometimes oscillators like RSI, stochastics, chart patterns, candlesticks. You know, these are all simply tools to help lower the odds of you making a mistake and predicting where the market might go. But they're not actually moving the markets. You know, so what's actually moving the markets? Let's start with an example. Say I offered you and everyone around you an iPhone 10 for $10. Let's assume that you like iPhones and you really want it. You might be an Android fan, but just stick with me in this one. So someone else is also going to really want it because it's really cheap. And then they will tell me that they will buy it for $11 and just sell it to them and nobody else. But you will interject and tell me that you'll buy it for $12. Prices keep going up until the whole market believes that the iPhone 10 is now overpriced. So basically what I'm saying is, you'll say $12 and the other guy will say 13 and you'll say 14 and 15 and you keep going on and on and on and on until it's like $1,050 and you're like, you know what? I could just go to the store and buy it for $1,100. I don't think it's worth me bidding higher anymore. So prices start to stagnate. And prices don't go up anymore. So this is why penny auctions on eBay, you can have them and still sell at a good price because prices will go up. So it works the other way around as well. So say I offer the market an iPhone 10 or iPhone 5 for $750, no one is gonna want to buy it. It's so expensive and it's such an old phone, so why would I pay that much? I'd have to lower the price of my iPhone 5 in order to sell it. So when I reach around $150, by the way, I don't know if that's truly what it would be, people will start to buy it and my price will start to stabilize there. So let's apply this model to markets. So Forex are global markets, and even the slightest uptick or downtick can generate or lose a company a lot of revenue if they're importing and exporting goods. Banks also want to trade so the currency that they hold in their bank doesn't go down in value and they maintain their value or even increase it. So when a currency is undervalued, it's the same thing as a $10 iPhone 10. And when a currency is overvalued, it's the same thing as a $750 iPhone 5. So buy low, sell high. Supply and demand helps you make sure that you aren't buying high and selling low. You know, there's a lot of beginning traders who will go out there and they're like, I'm gonna make a whole lot of money. And they see the market starting to go up and they're like, man, I think I'm missing out. Buy. And turns out they bought it at the top and the market reverses and they're losing money. Or other way around, the market keeps going down and they're like, man, I'm missing out. Sell. And they sell it so low that the prices go up again and they basically lose money. And you know, this happened to me personally. A couple years back I was trading Euro USD and I didn't realize it at the time, but I sold really low, and in hindsight I was actually selling in a demand zone which is the worst. So basically you can only buy when prices are low and only sell when prices are high. So you get quote unquote aligned with the big institutions and banks that have the capital to move the market. You just move with them. You know, as little players, not even 10 losses is enough to start like inching, like moving it a pip or moving it even a tenth of a pip. You know, you need a whole lot of capital. You need a lot of power moving the markets. And these big institutions and banks, they got the power. You just got to make sure you're with them. So for more information about supply and demand and all this kind of good stuff, go to fxsharks.com for more information. Get one-on-one mentoring, signals, and even some free resources. I'll have the link in the description. Remember, knowing how to trade is one thing, and making sure that your mindset is good is another. Trading is 80% how you feel and how you control your emotions, guys. It doesn't matter if you have the world's best strategy. If your mindset isn't good, you're not gonna make money. Telling you, your long-term profitability is going to be out the window. You might make money today or tomorrow, but come a year's time, you're going to be in the red, and your mindset matters. And that's why we teach mindset first, then the trading strategy. Heck, we even teach the math behind becoming long-term profitable. You know, probability theory. You know, the markets are kind of uncertain. You don't know if you're gonna win this next trade or lose the next trade, so you gotta use some probability theory as well. So, anyways, thank you for watching. Subscribe if you like the content. Hit the like button if you think this was helpful and it helped you understand what actually moves the markets. This is Sunny, and I'll see you guys next time.